What if the world's most powerful financial empire isn't a country, a government, or even a central bank, but a company? Most people have never truly looked at a company so massive that it manages more money than the economies of most nations on Earth. A company whose investments quietly touch nearly every major corporation shaping modern life. From the phones in our pockets to the technology powering the internet. That company is BlackRock, and the story of how it rose from a small Wall Street firm into the largest asset manager in human history reveals something profound about how power works in the modern world. Because while political power dominates headlines, financial power often operates in silence. BlackRock was founded in 1988 by Larry Fink and a small group of partners who believed that the future of finance would be built on a simple idea: understanding and managing risk better than anyone else. At the time, the financial world was still recovering from market shocks and instability, and investors were beginning to realize that the real danger wasn't just losing money, it was not understanding the complex risks hidden inside modern financial products. Fink and his team set out to build a company focused on data, analysis, and disciplined investment management. What began as a specialized bond management business slowly evolved into something far bigger. One of the most important milestones in its rise came in 2009, when BlackRock acquired Barclays Global Investors, the company behind the hugely popular ETF brand iShares. That single acquisition transformed BlackRock overnight, giving it control over one of the fastest-growing investment sectors in the world. Exchange-traded funds, or ETFs, allowed ordinary investors to buy diversified portfolios with a single trade. Global markets. BlackRock found itself managing trillions of dollars flowing through these funds. Today, the firm manages more than $10 trillion in assets. To understand the scale of that number, consider this: if BlackRock were a country, the wealth it manages would rival the size of entire national economies, such as Germany or Japan. But the true influence of BlackRock is not just the size of the money it manages, it's where that money is invested. Through its funds, the company owns shares in thousands of businesses around the world. In many cases, it is among the largest shareholders in some of the most powerful corporations on the planet, including companies like Apple, Microsoft, Amazon, Google, and Tesla. These companies shape technology, commerce, and communication for billions of people. Yet quietly, through its investment funds, BlackRock often holds significant stakes in them. That doesn't mean BlackRock directly runs these corporations, but as one of the largest shareholders, it has influence, especially when it comes to corporate governance, shareholder voting, and long-term strategy discussions. And that influence becomes even more powerful when combined with something else: data. Behind the scenes, one of the most important tools in BlackRock's empire is a sophisticated financial technology platform known as Aladdin. The name might sound fictional, but inside global finance it is legendary. Aladdin stands for Asset, Liability, Debt, and Derivative Investment Network, and it functions as one of the most advanced risk analysis systems ever created for financial markets. The platform analyzes vast amounts of market data, models risk scenarios, and helps institutions understand how their investments might perform under different economic conditions. But Aladdin is not just used by BlackRock. Banks, pension funds, insurance companies, and financial institutions across the world rely on the platform to manage their own portfolios. The system helps monitor trillions of dollars in global investments. That means one private company provides risk analysis infrastructure used across a significant portion of the financial system. And during moments of crisis, that expertise becomes even more important. When the global economy collapsed during the 2008 financial crisis, governments and central banks were suddenly faced with a terrifying question: how do you stabilize a financial system that is unraveling in real time? Complex mortgage securities were collapsing, banks were failing, and markets were freezing in the chaos. Governments turned to firms with deep expertise in analyzing complicated financial assets. Its analysts and technology helped evaluate troubled portfolios and assist authorities trying to understand the damage spreading through the system. It had become an advisor, a technology provider, and a key participant in stabilizing markets during periods of extreme uncertainty over time. BlackRock continued expanding its influence by blending traditional asset management with cutting-edge financial technology. The company positioned itself not just as a place where money is invested, but as an institution that helps the entire financial system function more efficiently. At the same time, its massive index funds allowed millions of ordinary investors to gain exposure to global markets through retirement accounts and savings plans. Individual investors all became part of the vast network of capital flowing through. This is why some analysts describe the company not as a traditional corporation, but as a central node in the architecture of modern finance. Influence in finance often operates quietly. It doesn't appear in dramatic speeches or political rallies. It shows up in shareholder votes, long-term investment decisions, and the direction of corporate strategies across global industries in recent years. BlackRock has also stepped into debates about sustainability, corporate responsibility, and the long-term risks facing the global economy. Its leadership has argued that environmental and social factors can affect financial stability, encouraging companies to consider how climate change and other systemic risks might shape future markets. These positions have sparked intense discussions across the political and business world, with supporters praising the firm for pushing corporations toward long-term thinking, while critics question whether asset managers should hold that level of influence over global corporate behavior. Regardless of where one stands in that debate, the scale of BlackRock's reach is undeniable. Through funds, data systems, and institutional partnerships, the firm sits at the intersection of global markets, technology, and corporate governance. Yet most people rarely think about the companies managing the financial infrastructure behind the scenes. We see the products we buy, the apps we use, the headlines about technology giants and billionaires. The financial networks supporting those industries remain largely invisible. And that invisibility is part of what makes modern economic power so fascinating. Because in the 21st century, power does not only come from political authority or military strength. It increasingly comes from control over capital, over the systems that allocate investment, measure risk, and determine where trillions of dollars move across the global economy. BlackRock did not become powerful through a single dramatic moment. Its influence grew gradually, through decades of acquisitions, innovations, and strategic positioning inside the world's financial architecture. By focusing on risk management, data, and large-scale investment platforms, the firm built tools that became essential to modern markets. And as those markets expanded, so did the reach of the company behind them today. When investors around the world buy ETFs, contribute to retirement funds, or track global stock indexes, many of those investments pass through systems connected to BlackRock in some way. The company operates quietly compared with the flashy tech giants dominating headlines, but its presence can be found across industries, economies, and continents. Which leads to a deeper question about the nature of modern power in a world where trillions of dollars move through financial markets every day. Who truly shapes the direction of the global economy? Is it governments, corporations, central banks, or the institutions that manage the capital flowing between them all? BlackRock's rise suggests that the answer may be more complex than most people imagine, because the architecture of modern finance is built not just on visible institutions but on networks of capital, technology, and influence that operate behind the scenes, and understanding those networks reveals something essential about the world we live in. Sometimes the most powerful forces shaping the global economy are not the ones making the loudest noise, but the ones quietly managing the flow of money that powers everything else. Like and subscribe to Power Chronicles if you want to know the secrets of the power world.